We are joined from Vienna this morning by Nader Itayim, who is the Middle East editor at Argus Media. He is our energy expert this morning. Nader, it's lovely to speak to you. Thanks for getting up early for us.
Thank you very much for having me.
And I'm going to start off by asking you what the weather is like, because, of course, it impacts demand, which therefore impacts energy prices.
It's cold, as you can imagine, but it's not unexpected. It is cold, I have to admit.
Well, you are in Europe, which is one of the areas that is directly affected by Putin's announcement that there will be a ban on oil sales to countries that are following a recent price cap announced by the G7, by the Australians, and by EU as well. What does it mean for Europe in particular? How much oil does Europe actually buy from Russia?
Well, at the moment, it doesn't buy very much. As you know, I mean, over the last few months, Europe has really tightened down in terms of how much they take from Russia. So if we look at the decree that was sort of passed a few days ago, if we try to see what the impact really will be on Europe, I'd say at the moment, it's not going to be. You have to look at it in terms of two sides. So there's volumes. On the volume side, there isn't going to be a massive impact there on the crude side because obviously Europe has stopped taking seaborne crude. But where it will see an impact is if we do see an impact on, say, price. That's going to obviously impact consumers in Europe. And obviously there's also the cost side of things. So with Europe not really able to take crude from Russia anymore, they're having to sort of source from other further away countries. So in this case, Europe is now taking more from the Middle East. So the costs have gone up for these countries in terms of trying to actually bring in more energy. So there is that as well. But obviously, there's also the product side of things, which is we're expected to see the ban on seaborne products coming in soon as well. Not quite yet, but in February. That could also complicate matters as well.
Right. So give me then an idea of how much of an impact this ban is likely to have on prices.
Okay. So as this is a general thing, what impact is going to have? I mean, we have to look at this. I think it's good to look at this in terms of two things. So one, how successful is this ban going to be in terms of what the EU and what the G7 and what the US and Australia want this to achieve, and obviously also how Russia's going to respond to this. In terms of what the impact's going to be, it is still very early days. In terms of the ban that came in and the price cap, we haven't really seen that much of an impact yet in terms of volumes on that side. Now, in terms of what Russia's going to do, Russia came out with this decree. So it gives us a bit of a hint as to how it's going to respond. But if you look at what the decree said or how it was phrased, it does kind of leave Russia with a little bit of leeway in terms of how it's going to move forward with this. Yes, it said it's not going to sell to any countries that are actually abiding by this. By these this cap, but it was saying that before, and they have sort of put in a few words there to sort of give themselves a bit of leeway in terms of exemptions, or we could even see this this response change over the course of the next few weeks or months, depending on how things work for them. And we heard in the past that Russia was potentially thinking about cutting back production if required. And we heard, a couple of weeks ago, I think, from the Deputy Prime Minister that we could see production go down maybe between 500 and 700,000 barrels per day. This idea that Russia is going to actually have to reduce production, it's been talked about quite a bit. If you listen to different analysts and their own predictions, you'll see quite a variance. I mean, the Russians have said 700,000 barrels per day. OPEC itself said about 850,000 barrels per day. The IEA, which has been a little bit on the higher side, has said a 1.4. So, it's still early days. We're going to have to see how that goes. But obviously, the more of an impact there is on that side and supply is cut, you could see prices rise.
Talk to me about those exemptions that have, as you say, been written into this presidential decree. What's your thinking about what's behind it? Is it designed to encourage countries to maybe move away from the cap, or to give Russia some flexibility if it needs the income?
Honestly, I think it's more about the flexibility than anything else. I mean, the reason why Russia has sort of maneuvered the choppy waters the last few months really has been the likes of China and India, who have not only continued to take Russian oil, but actually increased volumes, right? So the big question mark during the negotiations around this cap was, how are they going to react? How are these two countries going to respond? Are they going to, abide, or are they just going to continue buying as they have been? So I think this kind of this idea of exemption will allow Russia and Putin to actually allow these countries to continue buying without making too much of a fuss. It allows them to continue selling their crude, and the relationships there don't get damaged. As of now, obviously, Russian euros have been trading at below the $60 per barrel cap, so there hasn't really been much of an impact. So the trouble, so to speak, would creep up if and when prices do rise to beyond that level.
Okay, well, let's look at China, very much in the headlines this week. A lot more movement, but also a lot more cases. What's winning out there for the oil markets? More demand or a concern about what could be the impact of those increasing cases?
I'll be honest, it's a very, very tricky one to try and figure out here, because, as you say, we're hearing all the news about them, opening up, about the lockdowns being dropped, and they recently announced this whole kind of loosening of restrictions when it comes to travel as well. So in theory, yes, we are seeing an opening up, and in theory, an opening up would mean demand increasing, but at the same time, you're seeing COVID cases rising just through the roof, the levels we've never seen before. So I think if you're trying to look at the midterm, I think it's fair to say that oil demand is going to recover there over the next few months, but it's not going to be something immediate. I think we might see it take a bit more time than we would have otherwise expected, simply because it's not as simple and clear cut as, people are now back in the street and things are going back to normal. There are still the supply chains need a bit of time to clear up as well. So it's human psychology, but also the supply chain logistics. They're going to suggest that we're going to wait. Maybe it wouldn't be first quarter that we'd see things kind of return, maybe second quarter, third quarter. I think that's more likely.
Okay, we've got 1 minute left with you. Nader, quickly, what is your outlook for 2023? What's going to be shaping the market, and where are we going with price?
Well, I think we've touched on the two main issues here. I honestly think that Russia is the big one, and so is China. With the price, honestly, you could make a case for price going either way right now. And OPEC Plus has a tricky few months ahead of it to see how it's supposed to react. But if I had to sort of say which one has more of a case, I'd probably say that there's more of a case for prices rising in the short term, early next year, rather than falling.
Nader Itayim, Middle East editor at Argus Media, speaking to us very sportingly this morning from Vienna. Thank you for waking up and talking to us. We appreciate your time.